Silver is very, very close to an explosive move higher. When gold is really strengthening in real terms, that is a signal for when silver can really pick up. I don't think either market is suppressed. I would say manipulated, definitely. Capital is now going to start moving away from US stocks and into gold and precious metals. The gains in silver will dwarf gold. You can get into a hairy situation for silver where someone, I don't know, a government might try and corner the market. There's a real supply problem coming the next decade. Silver is still historically really, really cheap. This is still an incredible opportunity. That sets us up for really explosive years with respect to precious metals and gold and silver.
World War III is already happening.
This is a house of cards, and it is in the process of collapsing right now.
You're going to see an economic crash, the likes of which we've never seen.
Hi folks, Canadian Prepper here. Today on the channel we have Jordan Roy Byrne, who is a chartered market technician, master of financial and technical analysis, and publisher of the daily gold.com. And we were just talking before the video started that he is dressed the part today. Maybe this is why the price of gold and silver are skyrocketing today, because you decided to put on a gold shirt. I don't know.
It could be. It could be.
It never fails that when I do these talks with financial analysts like yourself, the price of metals is always rising. So maybe I just got to do these more often. I'm hoping today to get your perspective on this stuff right here. Sure if you can see that. Now, you told me beforehand that you're more of a technicals guy, not really so much in the physical market per se, but what are your thoughts on the silver market right now? I mean, can you just elaborate on what you think, where you think this is all going? Because it looks as though we might actually transcend that $35 ceiling today.
In the last month, something really, really important has happened, and that is looking at, I have some indicators I look at. I have gold against the stock market, also gold against a 60-40 portfolio. So that's gold against the total return of a portfolio. That's 60% stocks, 40% bonds. So gold against the conventional portfolio. That finally broke out of a 10-year base earlier this month. And secondly, gold has also broken out against the stock market. It broke out of a 4-year range. So if we're looking at these charts and we're going back, looking at this data over 100 years, these breakouts in favor of gold, these major breakouts, this is only the fourth in the last 100 years. The other key breakouts were 1930, the end of 1971, and the end of 2001. So earlier this month was a critical inflection point in which capital is now going to start moving more away from U.S. stocks and into gold and precious metals. And this is important because if you look at the performance of silver, you need this to happen first. I mean, you need this breakout to happen first for everything. But when gold is really strengthening in real terms, that is a signal for when silver can really pick up. So basically, we're at a significant turning point with respect to this month where we're going to start to see more capital come into precious metals at the expense of the stock market. Doesn't mean everyone's going to sell all their stocks and go into gold and silver, but everything in markets happens on the margin. So we're seeing a change where slowly but surely more and more money is going to move away from stocks and is going to come into precious metals. And if we look back in the last 2, 3, 4 years or so, we did see money started to move out of the bond market and go into precious metals. So now we're seeing money is starting to move out of the stock market and go into precious metals. So that sets us up for really explosive years over the next few years with respect to precious metals and gold and silver. And, talking about silver, if you look at a silver chart and you look at the monthly close and the quarterly close. So, 12 times a year we get the monthly close, 4 times a year we get the quarterly close. So on Monday, we're going to get a monthly and a quarterly close. And looking at silver, I should have taken a look before we came on, but $35 is really, really significant resistance on the monthly, more so the monthly chart. The quarterly chart, the resistance is around 32, 33. But if silver were to close at $34, $35 on Monday, that would be the third highest quarterly close ever. I don't have it handy what the all-time high quarterly close is. I think it might be 36 or 37, but essentially for silver, there's very significant resistance around 35 to 37. And ultimately, when we see silver start moving past 37, you're going to see silver moving much closer to more explosive moves because we have very limited overhead resistance from 37 to $50. And of course, then there's nothing after 50. So in the last year, silver has been chewing through all this resistance, which is another word for supply. So there's been supply available and people selling from 26, 28, 32, 33 to 35. So this 26 to 35, there's lots of supply, lots of resistance. Silver has been chewing through that. It's done a really good job. And now that we see it at 35, as we can see on the screen behind you, it's getting to the other end of chewing through all this supply. So silver is it's very, very close to an explosive move higher. I don't know if it's going to happen in the next week or next month or 3 or 4 months or 6 months or 1 month. But when we see silver take out that 35 to 37 area, it's going to be primed for a really explosive move. And so as we can see here today in the last few days, silver it's getting closer and closer. It's finally chewing through all that resistance and supply from 32 to 34.
And so gold right now is obviously that the gold silver ratio is in gold's favor. Why do you think that the price of silver has been so suppressed while gold has started its run already? And can you maybe explain a little bit more about this idea with respect to the relationship between the two and why silver lags gold? Is that what happened back in 2011 and 2012 as well?
Yeah, so if we look at the history, we have the 1970s, we have the 2000s, and typically silver does lag gold. Typically, what happens? Gold breaks out, it makes a move, it pulls silver along with it, but then it takes some time. Eventually, silver breaks through relative to gold, and you see silver outperforming gold. Now, I can speak to the technicals on gold and silver, and what people have to understand. Earlier last year, gold broke out of this 13-year cup and handle pattern, which is a super bullish pattern, really rare. So March of last year, 2024, gold breaks out of this 13-year cup and handle pattern, breaks out to a new all-time high. So there's no overhead resistance for gold. It breaks above 2,100. So there's no overhead resistance, which means no supply. Like you see this in markets a lot. When they break out of a really long range and they make a new all-time high, there's no resistance, there's no seller. So everybody that basically was invested in the gold market or had bought gold at the point of that breakout, everybody is in the money. So everybody who has bought gold has made money on it. Everybody in history who bought and is still holding it, I should say. And so therefore, there's very limited selling pressure as it moves higher. You know, the buyers and the bulls have the advantage. And so that is why gold was able to move up basically 50% in a year. It's had this, steady move over the last year because of this breakout. And I call it blue sky. So it's broken out. It has blue sky above 2,100. There's no real overhead resistance. Now, so the problem for silver is while that happened for gold, silver, I think was 26, 27, something like that when gold broke out. Silver has to chew through all this resistance from $28 up until 35, like we were talking about a moment ago. And so that, like from a technical standpoint, that's been one issue is the supply and demand for gold based on the market. The supply is limited because it broke out to a new all-time high. There's very, very little selling pressure. While silver, what the chart is telling us is there's all this selling pressure from 26, 28 up to 35. But what will happen is, as I was saying, eventually when silver, I think when it can go above 35 to 37, that's really the last significant selling pressure and resistance for silver. Like once it gets above $37, it's going to have very limited resistance until 50. And eventually when silver breaks 50, it's in that blue sky territory that gold is in now. And so eventually when we see silver surpass $37 an ounce, I think that's the point. You'll start to see it really pick up both in nominal, but also relative to gold. And eventually, silver will break 50. And based on what I talked about in my book, and I looked at the history of these other patterns, when silver breaks 50, it could go to 100, 18 months, 12 or 15 months after that. And so to come back to it, it's all about these key levels for silver. Silver is chewing through this resistance. It's getting closer and closer to the end of this resistance. So when it can take out 37, that's when you're going to see it, I think, really start to outperform gold. And, again, we'll see silver go from 50 to 100 in like a year or 18 months, something like that. And so gold will still be rising alongside it. But, silver, the gains in silver will dwarf gold and really kill gold at that point. So ultimately, if we're more focused on silver, we're at a really good point because we can still buy it ahead of when it is going to really outperform gold. As you know, the gold silver rate, it's around 90, but eventually, silver will break 50, run to 100. Who knows? Is it in 4 years or 2 or 3 years or 18 months? Somewhere in there, but that ratio will come to, does it come down to 50 or 40? So it's disappointing that silver has not outperformed gold yet, but that's the opportunity. The opportunity is gold has made this big move already. Of course, it's going much, much higher. But if you look at the numbers and facts and the charts in my book, silver is still historically really, really cheap. This is still an incredible opportunity. It has not moved that much yet.
All right, guys, so as some of you know, Canadian Prepper is a fully independent channel. We don't have sponsors and we're beholden to nobody. You can help support us by supporting yourself by gearing up at CanadianPreparedness.com. I know that in an emergency, having the right gear can make all the difference. This is why I've tested and curated the best preparedness products on the market so that you can be confident and ready for whatever comes your way. Now, back to the video. Well, especially considering its industrial applications and like $37, even psychologically speaking, for the average retail investor. I mean, someday, I imagine in the not so distant future, people are going to be talking about how cheap that was. Like $37 is, especially when you're looking at gold prices so high, a lot of people can't, afford gold, right? You can buy it fractionally, but then you pay this wicked premium on it. You could invest in it. You could invest in like something that tracks gold. But I think a lot of people are going to be moving to looking for an economic safe haven. And once retail gets its final fleecing in the next market crash here, they're going to be scrambling into something. And then you're going to have the industrial demand coupled on that. Then you're going to have the multipolarity, the geopolitical stuff layered on that. So I think you're right. I mean, I know you're looking at this from like more of a technical analysis point of view, but do you at all factor into your analysis like just the state of the world and those industrial demand cases for silver when doing your prognosticating about the markets?
Yes, I mean what I'll say is that is all factored in. I mean, some people might disagree, but all of those things in the market, everything that's happening in the background, the market knows all that information. So that is in the price. That is what we're looking at. But I will say on industrial demand, I've been a skeptic about that because if you look historically, it hasn't really meant anything for silver. Like if you look at when silver performs really well, it basically follows gold. Silver is a leverage play on gold. However, I will say what's really interesting is if you look at investment demand for silver and industrial demand. It's really investment demand. It's the same for gold. Investment demand is what drives the price. When the price in gold and silver are up, investment demand is up. Now, I think this has started to change in the last year or two for silver because normally industrial demand for silver is up, investment demand is down, the price is down. However, in the last year, I think it was maybe the first year where you actually had a deficit, but you had huge investment demand at the same time. So this is it's a new thing for me, but this could be a real change in the market where investment demand is rising. Oh, and at the same time, industrial demand is rising. And if you look at, the projections for industrial demand over the coming years, like if we have steady industrial demand year after year over the next 5 or 10 years, and, the market trends higher, the price trends higher as we all expect, this could be you could get into a hairy situation for silver where someone, I don't know, a government or whoever might try and corner the market. I mean, I'm not saying it's going to happen the next year or two, but if we're just looking out 10 or 15 years, it's going to be a hairy situation as far as silver supply. So yeah, some people might disagree with me. I don't think we're going to have an immediate supply problem, but if we're looking out 5, 10, maybe even 15 years, somewhere in the next decade, we could really come into a real supply problem. And by the way, to just to piggyback on your point about silver's going to look cheap right now. Yes, it is going to look cheaper. I mean, $37 silver. I mean that's going to be like looking like $4 or $5. You know, when we're talking here in 5 or 7 years, like it's the price is going way higher.
So when you say the government might corner the market, you're saying that it's going to be deemed like a national security thing where they're going to have to, because I mean, if silver's industrial applications, if we're talking about electrifying the planet, you know, and there's what 90% of the planet is still underdeveloped relative to the West, you know, I mean, that's going to definitely put a lot of pressure. So you're talking about potentially prohibiting silver as a monetary metal, as in the same way that they did with gold, or am I off on that?
Well, I don't want to speculate. I'm probably, there's someone who could better answer that than me. My thinking is if we're just putting two and two together and we're thinking about, well, there's investment demand is rising and industrial demand, even if you're just looking at industrial demand by itself and you're projecting out 10 years, like there could be a point when it becomes rare and so valuable that someone, like what happened at the end of the 1970s, maybe someone tries to corner the market. I don't know what the government governments will try and have their own special stockpiles, or something like that.
Strategic, yeah.
Yeah, I mean, those sort of things. There's other people who can speak on that much better than me. But it's just my larger point is, if you have investment, because normally it's either investment demand or industrial demand that's rising. But in the last year, we are seeing both rising. Like, it's really rare for investment demand, the price to be up a lot, but industrial demand is rising at the same time. Like, we've never seen that before. So if you look at this, you look at what could happen in the next 5 to 10 years, like there's a real supply problem coming the next decade.
Is there still a lot of downward pressure in the paper markets? Like, is there still a lot of manipulation going on there? And could you maybe explain that relationship as it pertains to both silver and gold, I guess? I'm always trying to get more insight about this phenomena of the relationship and the interplay between paper and physical. Is there a concerted effort to suppress the price of silver?
There could be. Again, this is not. There's other people who could. Yeah, there's other people who could speak to this much better than I can. Very big picture. I don't think the market. I don't think. I don't think either market is suppressed. But I would say manipulated. Definitely. So that's how I would answer that. And I just, and I know some people might disagree with me, and that's fine. But that's only my opinion, and I'm not an expert, so I don't profess to have an expert opinion on, the manipulation and the suppression. My guess would be, I think the market's manipulated, but not necessarily suppressed.
Well, I think that lends to your credibility in terms of your other assessment and analysis, that you're not willing to speculate, because there's a lot of people who do. I myself love to speculate. So, I'll do the speculation, I guess, for the both of us. With respect to the mining aspect of this, then, because I'm not sure if you know much about the profitability of silver mining and things of that nature. If you do, I would be interested to know, what the margins are, and if you have any insights about the other end of this industry, which would be the mining component. Is there something that people should be looking for in terms of, I don't know, like the jurisdictions, the geology, that just industry as a whole? Do you dabble in that at all?
I do. I'm very active. I'm an investor in junior mining companies, exclusively junior gold and silver companies. So I am very active, and that is something I follow. I am covering most of the Canadian companies. I'm trying to find the ones I think are really high quality that really have a chance to make huge gains over the coming years. And yeah, jurisdiction is very important. But yeah, we're really looking for. There's three things I'm looking for. I'm looking for, okay, which projects have the size potential? Like you really want to find something that is at a minimum 80 to 100 ounces of precious metals equivalent, which is gold and silver. The issue for a lot of silver projects, or a lot of silver projects, they're really base metals projects because most silver supply is mined as a byproduct. So there are some, but there's very few mines that are exclusively silver. Like typically,
Okay.
typically you might have silver and some lead and zinc with it, or it could be silver and gold, or it could be silver and copper. So when I'm looking for something that's silver, and you'll see, oh, we have 500 million ounces of silver or silver equivalent, but that could be only a small amount of silver. Like they're counting the base metals as part of the silver. And so when I say, I'm looking for projects that have, let's say 100 million ounces or potential for 100 million ounces of precious metals equivalent. That is silver and gold only. So that's something I'm looking for. The second thing is grade. It doesn't have to be super high grade, but it has to be, I don't know, 200 or 300 grams per ton. The third thing is something that can be a mine, and which is more difficult because there are projects that look really good and maybe the company stock is not doing that well. Well, that's probably because the market thinks it's ultimately not going to become a mine. Like it's too expensive to produce. There could be something wrong with it. There could be a permitting issue, to your point about jurisdictions. So for me, those are the three characteristics of a silver project that I really want to see. Does it have size potential? Does it have enough grade? And will it ultimately become a mine? And so those are the things that I'm looking for. And I'm looking at these smaller companies. But at the same time, I'm also looking at, not huge companies, but companies that are big enough where they're already established. Like there's enough value that they have already. And so if you find, and I own some of these, if you find a silver company that they've defined a good deposit already, or they're building a mine, or they keep growing what they have and it looks economic, it's big, it has high enough grade. You don't need to be a wizard. Like you can just buy those as long as you're not chasing them at super high prices. Obviously, based on what we're talking about here, the potential for silver to break above 37, break 50 in the next year or two. I think when silver breaks above 37, like obviously all silver companies will do really well, but I would say go for the quality companies. Don't automatically just think, oh, I'm going to buy this 2 or 3 cent silver stock and it has silver in the name, like this will go to $2. Like that, that necessarily won't happen. Like we know what's going on with the silver market, and the gold market, these larger fundamentals. We know where the market's going. So if you're going to invest in these companies, like do yourself a favor, do real research on these companies. Like unfortunately, most people, they do far too little research on the company. Like they research all the other things that are more interesting, the silver supply or, prediction, what could it do? What is the chart saying? That stuff is important. But at the same time, if you're going to invest in the stocks, do your analysis on these companies, like really do the research, like call management, subscribe to services like mine. I mean, I know I'm scratching my own back here, but, subscribe to someone you trust, who can give you good guidance along the way. So, I mean, that's my view on investing in the companies. There's a lot of risk. You have to use a lot of common sense, but educate yourself and inform yourself on these companies. Like people spend far too little time when they decide to buy these stocks. Like they don't research them enough.
Yeah. And there's a political aspect to this as well, right? Like we're talking about entering a new age of tariffs. And so, this could potentially be to the benefit of, domestic mining companies here in Canada, that they, are able to potentially get past some of those permits that were preventing them from conducting business before, depending on, I guess, who gets elected. So there's all these other angles to this that I guess we have to consider in terms of like where this stuff is mined. I mean, some of these questions I'm going to ask you are probably pretty elementary compared to what you're accustomed to, because of course, as preppers, we're coming to this strictly from a metals, physical market mindset. Where is silver predominantly mined? And I guess if you want to talk about gold, or where would you think that the prospects for growth in the mining industry are most in terms of countries?
Silver, I would say it's in Mexico and Latin America.
Okay.
Predominantly. That's where most of these projects are. There are a few in the US. I'm not sure about Canada. Canada tends to be more gold and copper projects. Okay. But, as you probably know, I mean, the Canadian gold price has been on fire, even stronger than the US dollar gold price. And so, like mining projects and actual gold mines in Canada, I mean, they are just killing it. They are just printing money now. Yeah. But yeah, so with respect to
kind
silver,
of like our central bank, I guess.
yeah, exactly. I mean the mining companies they're printing money, almost as fast as these central banks spitting it out. Yeah, but yeah, so for silver, it's usually in Latin America, predominantly, I should say. All these projects are in Mexico and other parts of Latin America. For gold, you can find gold, I mean, all over.
And do you yourself carry, do you deal in physical metals at all, or is it strictly?
I mean, I do own some physical for insurance purposes, but I'm not terribly active in that market. I'm more active in the junior markets as an investor and a speculator. I think I look at physical as like that's financial insurance, like that's a form of financial insurance, and then the owning things on the other side, like those are investments. So that's the way I look at it. I'm not as, like I'll say, there's probably other people on your channel who are far more knowledgeable than me who can speak to the physical aspects of the actual physical market. I'm more of an expert on the mining side and actual stocks and companies.
Well, I would encourage anybody who's interested in learning more about this to go and check out thedailygold.com. Another really elementary question for you. If somebody just wanted exposure to metals and they wanted to deal in the paper markets, where would they go? Like what ETF, or is there a particular something that tracks gold and silver and copper? What would you recommend in that respect? Not as a investment advice, but if somebody did.
Yeah, I would look at, I think the Central Fund of Canada. I think that's still, I know the symbol CEF, if that still trades in the US, but that's a fund that holds actual physical gold and silver. So that's one of my favorites. So yeah, I would look at the ETFs that are similar to that actually are holding the physical. I think Sprott has, they have some products. But yeah, I'm more, I focus more on the stock. So, but those would be my answer for getting exposure to metals, like a stock. Yeah. Just make sure you buy these ones that actually own the metal.
All right. And I guess lastly, I'll just ask you in terms of, your projections for this year. It's the dreaded question because, of course, you're putting your reputation on the line here. I mean, you can give yourself an off ramp if you want. But what would you say, coming the end of the year, where do you see the price of silver and gold at the end of 2025? And I guess maybe your long-term projections.
Yeah, I mean, I do talk about my predictions in the book, but I'm a little hesitant. But I will say with respect to silver, if we can see silver break above 37 in the next few months, then it probably can get to, I think, the mid 40s. Maybe it'll test 50 by the end of the year. My guess would be, I think 50 is more likely to be broken next year. I think this year, the real key, I mean, we're getting really close, is let's see if silver can break 37 and get into the 40s. So I think that's possible for silver by the end of the year. For gold, I think at some point gold could have a 10% or 12% pullback this year. I mean, it could happen in a month. It could happen in 4 or 5 months. I don't know. But I do think, eventually gold will be higher by the end of the year. I don't know, it could be 3,500, 3,600, something like that. If we're looking out the next 2 years, if we have an economic downturn, like if we have a recession or we have really bad stagflation in the U.S., if that comes about in the next 2 years, then I think you'll see gold at 5,000, silver at $100 an ounce. So that's the key. Like when I look at the technicals, I'm always thinking about, okay, what's going to happen with the market and the economy that facilitates or allows for the markets to reach these prices. Because you don't, if someone's saying, oh, based on this little bump here in the chart, gold is going to go to 5,000 in 18 months, and they're not, like, that's all they're telling you. I mean, that's basically, you're rubbing a crystal ball. They're just pulling it out of their ass, basically. Like, that doesn't help anybody. So yeah, my larger point is, if we do get a downturn in the economy, like a recession, where the central banks have to cut rates somewhat aggressively, or we morph into some kind of a stagflation in the next year or two, that will set up the potential in the next 2-3 years for 5,000 gold and $100 silver.
I mean, my intuition is that just looking at things on its face, silver is not popular. Gold is not popular. It's not being talked about in the media. Retail could care less about it. Still, they're still chasing altcoins and hoping that Tesla stock rises on the latest tariff news or something crazy like that. So eventually that is going to pivot, I think, back into a commodities, resource-based economy focus. And so it just seems evident to me that it has to happen. It's just a matter of when. So I'm kind of with you in that, yeah, we got to be careful in terms of saying, okay, everybody pile in now. But it just seems obvious to me that, I mean, once people realize what's going on and once, retail finally divests from the stock market and gives up on it, which, I mean, who knows? They could keep the casino running for years and years. But yeah, that's just my intuition anyways.
Well, your intuition, I do want to touch on that, because I do have I think a couple of charts in my book, and I have been publishing these recently on my Twitter feed. But if you look at the amount of money, like if you look at all the money that's in exchange traded funds and the percentage of that's in gold, in the gold ETFs, and you look at those charts, I mean, it's like the percentage of money that's in gold. It's like really, really, like it would have to go up like 7 times just to get where it was in 2011. So wow. Even though the price has been trending up, like you're absolutely right. Like if you look at the data and look at how much money is invested in stocks versus gold and silver, it's nothing. You're exactly right. These charts bear it out. There is nothing. Like nobody is invested in these markets yet. And they're just prices are slowly moving higher. And yeah, I mean, I made the point in one of my free newsletters. I showed, I think, a picture of the amount of money that's in silver ETFs now compared to 2011. What if it just goes up, a little bit, or, a couple percent? Where's the silver price going to, like, you don't need to see a massive move into gold and silver. Just a little bit more money. If it moves into silver, it's going to go over $50 easily. So, I have to applaud you, because there's actual hard data that bears out your intuition.
Well, and I mean, if I was the companies or the central banks or, dare I say, the elites who want to keep buying this stuff, I wouldn't want to popularize it either. I would not want, retail driving the price up. I would want to quietly be acquiring as much as I could to position myself for that very thing, which seems to be what's happening right now.
That's what the smart money's doing. I mean, and the smart money, they slowly position. They don't go all in at once. They just slowly dollar cost average. And that's what I would, encourage the audience. I mean, they don't necessarily need my encouragement, I'm sure. Don't feel like you have to buy, 1 million ounces of gold. Just keep buying a little bit of gold, or, maybe you're going to buy a little bit of silver every month, buy a little bit. You're going to be really happy you started doing that in 5 or 7 years from now. And like we were talking about earlier, silver is still really cheap. Like there's still, it has not moved that much. Like this price, again, this, 2, 3, 4 years from now, this price is going to look really, really cheap.
Yeah, I was just recommending to some of the camera crew here before we started that, just put away, a few ounces of silver a month. If you can afford it, go a little bigger. But, over time, you're going to retain your purchasing power in the very least and quite possibly make more money. I mean, I've interviewed pundits on the channel who think it's going to be less a store of value and more explosive investment at some point. Anyways, what is your book about, and where can people go to learn more about the services that you offer?
They can go to my website, thedailygold.com. They can opt in there for a free copy of my book. I send you a PDF and an EPUB file. It's really easy to read. There's 100 charts. It's a lot of the information that we talked about today is in the book. I'm basically giving an overview of precious metals, how gold and silver move over time, like from a 50,000 foot view. Why do they move? What causes them to move when they move? What's the impact of other markets? Because all these things are interrelated. So I look at that. I talk about how their value right now at present, based on history. And so there's so many charts in the book. And I also talk about the mining companies and how it's a boom bust industry. You can make a lot of money, but you can also lose a lot of money. I mean, you can make tons of money in these mining companies, but there's always a 60% bear market around the corner at some point. So I'm looking. I talk about mining companies, junior mining companies, the ones I like to invest in. Yeah, parts of it are a little technical. I also have a chapter on de-dollarization, which my friend Vince Lancy, who's a professor, wrote that because he's way more knowledgeable on de-dollarization than I am. So it should be a quick read. There's lots of charts and graphs in there, and again, doesn't cost you anything. Just go to my website, thedailygold.com. They can get that for free. And I'm also I've started to put lessons from the book on my YouTube channel, which is also The Daily Gold. So if you don't want to read it, you can watch the videos. I'm putting each chapter into one lesson. I've published, I think, 3 or 4 so far.
Good stuff, man. Well, thanks a lot for coming out. I would encourage people to go and check out Jordan's YouTube channel and thedailygold.com for more information. Check out his blog, which I think you update quite regularly, don't you?
Yes.
Awesome. Good stuff, man. Well, thanks for coming out. I appreciate it.
Hey, thanks so much for having me.
The best way to support this channel is to support yourself by gearing up at CanadianPreparedness.com, where you'll find high-quality survival gear at the best prices, no junk, and no gimmicks. Use discount code PREPPINGGEAR for 10% off. Don't forget, the strong survive, but the prepared thrive. Stay safe.